Hey everyone, I'm David Nates and welcome to my channel. I've noticed that since the beginning of the whole pandemic and lockdown, a lot of people are speaking about finances, the stock market, and the state of our economy in the future. Thing is that unemployment is at record highs with over 10 million people filing for unemployment just in the past 1.5 months. Gas prices are tanking and let's face it, we're living in a US economy that is pretty much shut down. Just look at billionaire Elon Musk and how he is vocalizing his opposition to the lockdown through tweets. After all, America is built on consumerism, and if people are stuck at home and in fear of spending, then we are in for a ride. The thing is, rich or poor, we are living in a really volatile time, and the future is pretty uncertain. All health officials are saying that a vaccine is at least 1 to 1.5 years away, and even now that we're gradually reopening states and countries, businesses are not very likely to be operating at the same level with the same amount of people that they had during pre-pandemic times. Coming back to normal, as we have known up to just very recently, is going to take time. We as humans are simply going to have apprehension of being in crowded places for fear of becoming sick. It's just our survival instinct. We can't do anything about it. Because of that, people who are out of work, stuck at home, may be looking at alternative ways to build some income. With ease of use of the internet, investing in things such as the stock market or cryptocurrencies seems like a pretty easy solution. We did just have the Bitcoin halving on May 11th. This means that miners just had 50% of their revenue disappear because they will get only 6.25 BTC per block in contrast to 12.5 coins per block prior to that. So logically, one may think that prices will skyrocket. Well, like the stock market and the uncertainty that we are facing right now, logic doesn't always mean things will happen the way that they should. Reading articles and looking up the news, we see groups of people saying that we are heading into a new recession and other people screaming that we are going into a new bull market. What we need to understand is that the stock market is not the economy. Companies can do well even during a recession. Take for example Amazon. Because everyone is stuck at home, online orders through the Amazon service have garnered record high earnings. It's normal that people are buying stuff online because they cannot go to stores and leave the house too much. But record high sales for one company will not indicate the overall economy of a whole country. The truth is that 15% of all Americans are unemployed at the moment, and numbers may become higher. This is why understanding the real impact of the stock market and what strategy to use in this pandemic economy is important in order to actually come out ahead with some financial profit. In finances, there are two types of investor mentalities. The first type is the investor that is simply looking from the sidelines, watching calmly as things unfold and waiting for the stock market to actually match the actual state of the economy. Kind of like a lion trying to catch its prey. The second type of investor is the investor that doesn't want to miss an opportunity and truly believes that even though stocks have plummeted, they will eventually go back to their all-time highs. This is kind of like FOMO, or the fear of missing out. Usually this kind of investing strategy is highly influenced by social media, posts, the news, and the anxiety that they create in people for fear of missing the stock market train because they didn't invest in the market fast enough. This FOMO style of investing is at a much higher risk because if you look at historic market rises, if a stock goes up too fast, it usually either goes down just as quickly or eventually goes back to its uninflated value. That being said, there are three mistakes that can really hinder one's financial success. Number one, trying to time the market. In our current state of the world, it's impossible to tell exactly what is going to happen. The worst mistake one can do is to do something just because the economy says that it should. The market is already irrational in normal times, and now that people are unemployed, losing jobs, and simply stuck at home, we cannot predict what is going to happen in the near future. For example, I'm in the entertainment industry and all productions have shut down, movie theaters, regular theaters are closed, and the event industry such as parties, photography, cinematography, from which I used to make most of my income, is shut down. Who knows when large gatherings will be allowed again, and even if they are allowed, will people be too scared to actually be in public places surrounded by large groups of people? Then in order to save the US economy, the government is handing out various stimulus packages left and right, such as $1,200 checks, extra $600 unemployment money, bailing out companies, and in general trying to keep people from panicking, and ultimately consuming. A crazy thing that's being thrown out as of late by the US government is the Automatic Boost to Communities Act, known as the ABC Act. This is a response to COVID-19 that has been proposed that would provide to every person in America with a $2,000 preloaded US debit card. Each card would be recharged with $1,000 monthly until 1 year after the end of the coronavirus. Don't get too excited though, as this is just a proposal, but what I find really interesting about this is the way that they want to fund it without creating additional US debt. The US Treasury would print $2 trillion in cash, and the US Mint would give them two $1 trillion coins that they would value at the same amount that the US Treasury just printed in dollars, and no extra debt would be created to the US government. As you can see, everything is unpredictable in our current market. Nothing is rational, and trying to time things is impossible. Number 2, trying to become rich fast. Many people will just start investing because they see that some stocks may have made a couple of % profit in one day or in 1 week. When you're not used to looking at the stock market, seeing such gains may make someone think, wow, I could have made X and Y profit if I had invested at that moment in time. Obviously, people who invested in stocks such as Microsoft or Google 20 years ago and just held on to them may have made a huge percentage in profit, but realistically, if a company isn't worth that much money at the time of investing, what is the percentage of people that would have actually invested in that company and who would have held on to it for so many years? It's kind of like buying Bitcoin when it was at $2. The reality is that there is no get-rich-fast schemes that exist. The best way to invest is basically to invest at any time, but gradually and for a long period of time, not really looking at the fact that your portfolio went up 3% one day and back 4 the other. If you take, for example, the S&P 500, which is the index fund that started in 1929, comprised of 500 stocks from the largest US publicly traded companies, on average, the approximate return is 7 to 8% yearly, with some years doing better and others doing less well. The thing is that there's inevitably going to be periods of time where the economy is just not going to do well. Look at what one virus did to the world in just a couple of months. But as we've crashed in the past, eventually, with time, we more than likely will recover. Humankind is resilient. Don't put all your money at once, and don't invest more than you can handle. If a person invests gradually without investing too much or putting everything at once, then with time, usually investments have time to mature. This may take years or decades, but that is the most prudent way of doing things. Number 3, you must actually invest. It goes back to the investor looking from the sidelines, waiting till the perfect storm happens. It's the same with stock market crashes. It's not because there's historically been market crashes in the past that there's going to be another one in the future. And even if there is a new crash, will it be as bad as the last one? And will it give me the same opportunities? I always like the saying, slow and steady wins the race. Honestly speaking, if your goal is to simply become a millionaire within your lifetime, it's actually very attainable. The sooner you start investing your money, the easier it is to reach 7 figures and to actually use the power of compound interest. Ideally, you'd want to start investing in your 20s in order to make that million at an earlier age. But even if you were to start in your early 30s, building more than $1 million portfolio isn't too hard. In order to illustrate how easy it is, I'll take an example from an article on CNBC which illustrates how much one needs to set aside each day, month, and year and put it in an investment such as the S&P 500 in order to have 1 million saved up by the time one turns 67. These examples assume that the person investing starts with $0 at age 30 and assumes various average annual investment returns. If we take the example of a 4% annual return for 37 years, this means one needs to invest $33 a day, $982 a month, or $11,769 a year. If we take, for example, a 6% annual return for 37 years, this means one needs to invest $21 a day, $610 a month, or $7,413 a year. Now, if we take the example of an 8% annual return for 37 years, this means one needs to invest $12 a day, $366 a month, or $4,552 a year. So as you can see from the examples I have illustrated above, consistently investing and not really thinking too much about the fact that the market is up or down on that day can give somebody a really easy journey to creating $1 million. This is what all savvy entrepreneurs do. It's called putting your money to work. And if you're not ready to start looking at the stock market, investing in an employer's 401k plan, or taking advantage of alternate retirement saving accounts such as a Roth IRA, a traditional IRA, and or a health saving account can be a good start to creating wealth. There are multiple ways of building a good investment portfolio. Just don't panic and keep a level-headedness. If you enjoyed this video, please be sure to subscribe and hit the like button. As a final note, the world has always been cutthroat. It's just that sometimes we forget that we live in a dangerous place because we are surrounded by all the comforts that modern day lifestyles have given us. Work hard, try to get a steady job or stream of income. Markets have always been forward thinking, meaning that the future is always better than the current moment. Realistically, we are in a bit of a slump and it'll take some time for people to truly feel comfortable in their skin, but eventually things will get better and back to normal and things will start looking bright again. It just takes time. Don't panic, keep investing slowly and consistently, and in a few years, this will all be a blip in the history of the universe. Have a great day, and I'll see you in the next video.